Welcome back. You're with us on Editors Roundtable, and it's a spirited conversation we're having this Friday afternoon. Rahul Arora still in conversation with us. So, Rahul, we've discussed, of course, the softer aspects and the harder aspects in terms of numbers, age, and so on and so forth. Let's come down to brass tacks. Next 6 months in this market, should you be putting in all of your 100 rupees, 50 of those 100, 25? What's the approach and what to buy?
Oh, you're talking about in terms of just equities or asset allocation?
Equities, and if not equities, what else?
No, I think there is a case for gold. I wouldn't put if I had 100 rupees, I would certainly not put all 100 into equities. I think probably I'd still say 70, 75 into equities, but there is certainly a case for putting in about 15, 20 into gold. The balance you can sort of, you can go back to conventional ways of fixed deposits and so on. Because even if you're sitting on television and saying this and, saying pura equity mein dal do, people are going to invest there. So it's a norm of life. I think within equities, Surbhi, I think large caps is probably going to outperform mid and small caps over the next 6 months, because that was the time horizon you gave. And within that, I think the case would be more towards private sector banks and IT services. I think that's probably in a quick summary, the way I would look at it.
What about Adani Group stocks? They were the most talked about. Suddenly you have negative news flow on the group. But we have spoken about this in the past. I remember 18 months or so ago as well, when this entire fiasco broke out. And ACC, Ambuja, as well as Adani Ports, I recall we discussed, and all of them did well. What's your view on the stocks?
So I think, Nigel, these are obviously the three crown jewels of that group. And I think obviously ACC and Ambuja, even before they took over, these are very cash-rich companies. So there's nothing wrong with the operations. They've been existing in the business long before, some of these groups even came into existence. So there's no issue as far as the business is concerned. It goes back to what kind of volume growth and so on and so forth. The problem here is when something like this happens is this issue of governance premium and discount.
So don't buy.
So no, I'm not saying don't buy. I'm just saying that as a fund manager today, if I'm looking at large cap cement, I have predominantly three options. I have Ultratech, this group, ACC, Ambuja combined at some stage, and Shree Cement, right? Shree's valuations are not that compelling at this point in time, so it's either Ultratech or this. And you would see, I think the day the news came out and the market was down, Ultratech was up 2%.
Yes.
So I think at this point in time, if you're somebody who can take that 2-3 year view and look at value, it's not a bad time to be looking at Ambuja. But don't expect miracles to happen in the next 3-6 months. If that's your time horizon, I'd probably say you're still safer off being with Ultratech than with this.
But if you have a longer term horizon?
I think ACC Ambuja, because there is genuine cash on the books, there are genuine assets there. So also for Adani Ports, I think if you have a slightly longer term horizon, certainly buy into these three. The others we don't track and have no view on the other Adani Group stocks.
Got it. Okay.
Okay, all right. That's plenty of food for thought. Rahul, thank you very much for joining, and we're going to take you up one day on that larger, longer discussion on consumer, because it's a very interesting aspect. For now, it's a wrap on this edition of Editors Roundtable. Thank you very much for being with us. More news and updates coming up on the other side.